Good afternoon and happy Thursday, everyone. It is Scott Wohlers with River Place Capital. It is Thursday, January the 29th. I'm going to take just a brief minute to discuss what equity markets did last week, as it was a relatively muted market from a relative performance perspective. But man, there was a lot that went on underneath the surface last week, as it was a very volatile week in the equity markets. But the S&P 500 was down 35 basis points, or 0.35% on the week. The mid cap index was down a little worse, as it was up higher more year to date than the S&P 500. It was down 55 basis points, or 0.55%. The small caps, which have been the leader year to date, were only down 40 basis points, or 0.4%. And as we moved into this week, we had a nice little rally to start the week. We hit 7,000 intraday for the first time in the S&P 500 this week. And so momentum was riding high until yesterday's Fed meeting at 2, and the press conference we got at 2:30 from Jerome Powell after that was relatively tame. It was exactly what markets thought. Nothing happened. The Fed paused, indicated more than likely that they were going to continue to pause throughout the remainder of Jay Powell's term, and that they see elevated in the markets, and that rates are where they need to be based on the strength of the economy and where inflation is. And they believe that holding rates steady is the appropriate course of action. And the market was flat yesterday in response to that. And the other big piece of news that the market was really looking forward to, and all eyes were on this week, were the start of mega cap tech earnings. And so last night, we got Meta, and we got Microsoft, and we got Tesla. And what you're seeing is a divergence of this equities based on the performance, not on the actual performance per the quarter, but on the guidance and the margin guidance. So Microsoft beat top bottom, great quarter. However, Azure, their cloud unit, showed growth that was still very strong, but not growing as strong, and their guidance was not as strong as the market wanted to see, as well as the margins had decreased as their CapEx expenses for AI expenses were higher than what analysts wanted to see. And you're seeing a dramatic response, with the stock down at one point today on Thursday, down 12% on these earnings. Whereas you have Meta, who reported last night, same thing, beat top and bottom, but their guidance was above the midpoint for revenue. Now, their CapEx was above what they had guided, but because their revenue and their growth rate was higher, the market has given that a pass. And at the highs, it was up 8-9% intraday on Thursday. And so you're seeing a big divergence here, and you're seeing the ripple effects now of what happens when one of these big cap tech names makes a big move, because they're also not only big positions that people hold or professionals hold, but they're big in ETFs, and they're the top positions in ETFs. And as some of these get sold, you're seeing Microsoft getting reduced in positions in ETFs and things like that. Well, you're seeing the ramifications of other stocks being sold off, and the software as a service stocks are being sold off in response to Microsoft's earnings. But what we've seen so far is 13% of companies in the S&P 500 have reported, 75% are beating. It's nothing disastrous. The guidance appears to remain very strong, and the underlying U.S. economy remains strong. One thing that we are keeping an eye on, is that it is a volatile market. We are tracking money flows and making sure that those are going to remain positive. They are starting to lose some momentum, which could lead to some volatility and some downward pressure in equity markets. So we're going to keep a close eye out on that. But we're almost wrapped up. Tomorrow is the last trading day of January, with a positive end to the month in the S&P 500 that could give that positive January indicator, which gives you a 70% likelihood of having positive markets for the year. And understand, when you have big moves like this, if you are someone who holds Microsoft or looks at Microsoft as a long-term shareholder and you see it, understand that money at this point goes looking in the markets is leaving expensive stocks and looking for cheaper stocks in equity markets. And that's what you've seen so far year to date. And we expect that trend to continue. So if you liken it to a magnet, for example, where you have the very expensive money on the very top of the magnet, well, it's going to look to try to find the opposite polarity of that to connect to, which is going to be the less expensive money or the cheaper money. And so that's what you're seeing is this transition, and it can create some individual volatility when that happens. So if you have questions about how to navigate that as we're going through that, feel free to give us a call. We'd love the opportunity to speak to you. You can reach us at 904-346-3460. As always, check us out online at www.riverplacecapital.com. I hope everyone has a wonderful rest of your week. Thanks so much for watching.